All right, what up, man? Profit Gang, y'all know what it is. Hey, we're back again with another video. All right, so in this video, I really don't want to waste any time. I just want to show you the gold sell trade from last week's NFP, which actually happens to be the first NFP of the year of 2025. So several things happened on the charts, especially here on XAU USD, which of course we all know to be gold. So I'm going to be covering the gold movement even before the NFP, during the NFP, the aftermath of the NFP, and what I think we may likely see next on gold. So I'm going to be giving my projection in this particular video. So usually I don't really do projections in my videos. I do more of like, market breakdowns after the fact that, the market must have moved in a certain direction and or things of that nature. All right, so I'm going to be doing a projection in this video just to, put it out there. All right, just to put it out there, and we're all going to see together how the market is going to react, especially after market open, and how the week develops. All right, but before I get into the video, I just want to talk to the people who are beginners, or maybe people who are seeing this page for the very first time. Now, if you are a beginner or you're seeing this page for the very first time, I really want to urge you to maybe go through the page, explore the page, of course, like some of the videos if you learn anything from the video, and of course subscribe to the channel, because a lot more videos are going to be coming, especially in this year of 2025. Okay, I really hope to be more active when it comes to breaking down the market and doing live projections and things of that nature. Now, if you want to find me on Telegram, okay, which is one of the places where you can reach me personally, links are going to be put below the video. Okay, one of them is going to be my direct Telegram link, where you can just click on it and send me a message directly on Telegram. And of course, if you want to join a community, you can go on Telegram and find this community right here. Okay, let me just put this also on the screen. If you're watching this, you can just pause the video and scan this QR code with your phone. I believe it's going to bring you straight into this Telegram channel. Now, what happens in this channel, I post links to my personal trading. I post signals sometimes, and of course I do a lot of market breakdowns. Okay, I do a lot of market breakdowns. This group, to be honest with you, is equivalent to a whole lifetime mentorship. All right, so yeah, if you want to be part of a growing community, then of course you can join the channel from right here. Now, the trade I'm going to be covering on gold, you can see the trade was actually taken. This is 2680.75, and we're going to compare this to the entry that we find on the charts. But I actually took this trade, and the trade was able to give me about $1,600 in profit at the time I closed out on the trades. All right, so apologies for my voice. Yeah, as I progress in the video, I might have to pause sometimes and have a drink of water. All right, as I'm about to do right now. So I'm gonna apologize for that. All right. All right, so now let's get into the breakdown. Okay, so here we're looking at gold on the daily time frame. Obviously, if you're looking at gold on the daily time frame right now, you can see that we are in a huge range. All right, now what do I mean by range? The market is not trending to either direction, meaning that the market is neither going up, this would happen to be an uptrend, and the market is not really pushing down right now, this happens to be a downtrend. What we are seeing on the daily time frame is the market kind of like moving sideways, something that looks like this. This being a ranging market is very simple. Now, if you look at the nature of the range, right, this is the high of the range right here. The market hasn't really broken that high, telling us that we are in a definite uptrend, okay, based on the structure we can see on the daily time frame. All right, now this here is the low of the range. So you can see the market ranging in between this. So the market pulled all the way to the downside, the market pulled all the way up, it pulled all the way down right here, it pulled back all the way up. Now notice how when it came up, it kind of like grabbed this high here, okay, and then it pulled back down right here. So the way I was interpreting the market was, especially understanding, internal and external structure, what I just drew out here being the range, we can take that to be the external structure. All right. So if I remove this and I remove this right here, this leg, okay, this high all the way down to this low becomes a leg of price on its own. Okay. And then when we zoom in to get the internal structure of this leg, so I can remove this, and then we can find something that looks like this, being a high, low, we have high, there's an internal break of structure there, we have this created, and then we have this. So at the time, this would have been liquidity, okay? This would have been liquidity for the move that was created here to the downside. I'm sure a lot of people would have caught this trade based on a liquidity grab and then sell to the downside. Of course, the market was reacting, from a fair value gap. Now, I'm throwing a lot of advanced concepts out there. For the people that are beginners, you might not be able to follow what I'm doing right now. But if you've been watching this for a while, if you've been trading for a while, if you understand market structure, smart money concept, things of that nature, then you know exactly what I'm talking about. All right. So this would have been liquidity for this move. Exactly the same way this high here is now liquidity for this move. Okay, you can see how when the market failed to get to the order block here based on internal structure, all right, the market pulled to the downside and then it came all the way back to sweep this high. Now, I would argue that the market was still in its pullback phase around here. So all of these movement to the upside here, the market was actually pulling back because the external leg fell to the downside. So from this high all the way to this low here, that was the initial push. I would argue that all of this is a pullback, okay? Because I strongly believe that the market really wanted to get to this order block right here, okay, based on internal structure of the market. And again, we can add some other confluences like Fibonacci as well. This is where Fibonacci really thrives because we're looking at external structure and of course we're looking at higher time frame structure. You can see exactly inside the golden ratio there being the 62% level to the 79% level. Okay, whether you decide to call it 0.62, 0.79, we're talking about the same thing. All right, so you can see the market is reacting from a fib level and we're expecting it to drop based on the fib now, not based on structure. Now, looking at what has happened here, we can now say the internal structure of the pullback leg is now this. So we have a low here. We have this as a high. Remember, we still haven't mitigated the order block at this time. Then we have this as a low. Then we have this as a high. Now mitigating the order block and grabbing liquidity from this area here. Then we have a break of structure. Now, mind you, when the market took out this low to the downside, we failed to get to this order block here. Okay, which is an indication that in the same way the market failed to reach the order block here, it's also possible that the market can come back to reach the order block here. Okay, maybe to grab the liquidity here before pushing to the upside. Remember, the market itself is an environment of probabilities. Every single thing you can imagine could actually happen in the market. Okay, so we're not just imagining things. We're saying a reason for us to expect the market to sell to this is because it has happened before. Okay, and we can speculate that it's going to happen again. Now, if this is going to happen again, it's possible for this leg now, okay, this leg is now an impulse leg of its own because we can see a break of structure of the internal structure, okay, that brought this pullback to the upside here. Okay, long story short, the markets reacted from here, and this, while some people can look at this as a liquidity grab and they can be 100% correct, all right? So if you're seeing this as a liquidity grab, you are correct. This could be a liquidity grab, all right, based on your perspective of the market, but also this can be a break of structure to the downside. Now, I'm saying that to say this, I'm expecting this leg to pull back to the upside into this order block for a possible sell, all right? And that's the sell we were waiting for. Okay, so I'm just giving you guys a breakdown, giving you a backstory why we were even looking for sales around this area in the first place. Okay, because there has to be a reason why you're looking for a trade around a particular area. All right, it's not just I think the market is going to get there, or I feel like the market is going to get there, or I just know the market is going to get there. No, there has to be a reason, okay, technically, maybe fundamentally sometimes, why you think the market can even get to a particular level in the first place. So knowing that the market can get to this level in the first place, mind you, I already broke down gold. Okay, if you go to the community, if you join the community and you scroll through some of the videos, this is the trade that we caught on gold. All right, that's the trade we're breaking down right now. But if you go through the community, right, you're going to see where I talked about gold in another video that wasn't posted on YouTube. All right, so just scroll up a bit. You can see even right from down here, we've been calling for gold to get to these levels here. All right, but I did this in a video. Yeah, I believe this should be the video. All right, so if you go over this video, you're going to see how the buys came to be. All right, we broke down these buys from this area here all the way up in that particular video. So it might do you a lot of good to go back to that video right there. But anyways, jumping back into what we have here. So that's the reason why I was expecting a sell from that area. Very, very simple, just based on this that I am looking at here as a break of structure. Okay, it has now made this candle here, you know, an order block. Okay, an order block is simply the areas or the zones where we want to trade from. All right, if we're buying, we're buying from a bullish order block or a demand level, and then if we're selling from a bearish order block or a supply level. You can call it support and resistance if you want, but as long as you understand the idea behind it. For me, I feel like whatever action you're taking from a particular level, you can either call it a demand level, a support level, a point of interest, as long as you understand the concept behind it. All right, so personally, I understand I'm going to be looking for sales from this level. Now it could be a supply level, which is how I call it for the most part, but it could also be a resistance level. If you decide to call it a resistance level, then it's fine, as long as you understand how it was gotten in the first place. All right, now if you understand something again about structure, look at this leg right here. All right, this is the high of the leg. Okay, that's the high of the leg, and this is the low of the leg. Now what you would observe about that leg is the fact that we also have internal structure on this leg. All right, if you look very closely, based on internal structure, now we have this, that's a low, that's a high, and then the market proceeded in creating a new low. All right, now for the fact that we have this in here, a lot of people would know this as a drop based drop. All right, the opposite of this would be a rally based rally. But just looking at it in terms of structure now, in terms of what was the flow of money, all right, the market was selling, it went back up, then it came back down. This is a structural level. Now based on internal structural level, we're going to have internal order block around that area there. I just want to show you what happened when the market actually got to that level of internal structure. You can see clearly that there was a reaction. Now for a day trader, you could have gotten a very nice trade from that level as a day trader. All right, you can see how the market came into that level. There was a reaction from that level. Okay, now back into this level, then the market broke to the upside. Now, why did this level here fail? Is because the external level is the one that is pulling back. Okay, remember, this leg is now external. Okay, this high to this low is external. We broke out of this. So we are looking at this leg, that is one external leg. Then what is inside is the internal leg. All right, now mind you, the whole external leg is the one that's expanding. So there's a very high probability that the internal structure is not going to hold. It might give you a reaction, but it's not going to hold. All right, we're going to talk about this again, even when we go to the 4-hour time frame. But mind you, we were anticipating the market coming to this high here. Now going to the 4-hour time frame, you can again see the, you know, the presence of internal and external structure. All right, internal and external structure. Now if you look at this externally, this is the low and this is the high. Okay, external structure. All right, but let's go to the 1-hour time frame. So on the external, you know what I'm going to do? I'm going to draw this. So this, what I'm drawing now, is representing the external structure of this market. Okay, so you can see, we can see through this, you know, line that I just put there. Let's go to the 1-hour time frame and see the internal structure there. Now looking at the 1-hour time frame, I want to strongly believe that we can all see the internal structure. I want to strongly believe. Now, if I'm going to mark out the internal structure using the part 2 here, we can say this is like a low, high. That's a low. This is a high. And of course, I've marked out some of the relevant breaks of structure. So again, this is an internal level of structure. All right, that's a high. This is a low. That's a high. This is a low. We have a high. We have a low. We have a high. We have a low. Let's just call this a high. All of that is internal structure. Now, I want to draw your attention to this area here of internal structure. You can see the exact same thing happened around that area there, where we had this level of internal order block. Now, you can see how the market reacted from the internal order block. Okay. And a lot of people would have looked at this here as a break of structure to the upside, and they wanted to catch a re-entry based on that. Now, that would have been a beautiful trade. It's just that the market really wanted to come to this level here. Okay? The market really wanted to come here because the market coming here will mean a complete pullback of the external structure. Remember I said this is external structure. So we're expecting the pullback to get to external structure level. Okay? External structure level. These levels are from internal structure. Okay? We want a healthy pullback, especially when it comes to, again, in terms of Fibonacci, the golden ratio level. All right, not equilibrium level. Okay, so keep that in mind. I just wanted to put that out there too as well. But anyways, now based on internal structure on the 4-hour time frame, okay, and that's the importance why I went on that whole rant about internal and external structure, because this level that we actually traded from on the 4-hour time frame was a level of internal structure. Now, mind you, we already got our order block from the daily time frame. Okay, let's put the daily on this side here. We already got our order block from the daily time frame. This is the daily order block. Now, on the 4-hour time frame, when we go back in on the 4-hour time frame, this is the leg we are examining right now. All right, that's the leg right here. Let me put a very long arrow there. You can see, boom, that's the leg. Okay, I want to make this visible on the, oh yeah, you can see it, you can see it right here, you can see it right here. All right, you can see it right there. So this is the exact same leg. This leg is the leg we're examining right now. So this is our daily order block right here. So since we're examining this leg, when we go to the 4-hour time frame, we want to see the internal structure of the leg. All right, now based on internal structure here, I strongly want to believe again that you guys can see this with me right now. I don't want to be the only one seeing this. Okay, we have something like a low here, a high here. There's internal break of structure here. This order block here fails to be what? Mitigated. The market came here. Another internal break of structure here. The order block yet again fails to be mitigated. You can see how the market continued to the downside. Okay, and gave this low here. This low is this same low, just to make that a little bit visually appealing. All right, now this is the internal structure coming from the 4-hour time frame. So let's make this blue. All right, let's make that blue. So you can see here we have internal structure. Now notice how on the daily time frame you can't really see, you know, a body of a candle or anything of that nature. All right, what we can see here is a wick. Now this is the reason why we don't throw away the wicks. Okay, because what might look like a wick on the daily time frame definitely could be a body on the 4-hour time frame, on the 1-hour time frame, or smaller time frames. All right, so you can see on the 4-hour we are having a very, very nice looking order block, but on the daily time frame there we can see nothing. All right, so you see that's a 4-hour order block gotten from the 4-hour time frame. Very important to note that it's gotten from the 4-hour time frame. So on the daily time frame is not actually very, very much relevant. In fact, based on the customizations on my chart, you can't even see your 4-hour supply in this case. Now you can't really see your 4-hour supply level on the daily time frame based on my customization. It's only important when I come to the 4-hour time frame. Why? Because that structural level is gotten from the 4-hour time frame specifically. But what do I want to see? I want to see alignment. Okay, I want to see alignment with the daily order block. Now, what do I mean by alignment? You can see how clearly here this order block is inside the daily order block. If I make it visible here, let's double click this, let's make it visible. If I make it visible on the daily time frame, you can see how it's inside the daily order block. Now on the daily time frame, anytime the market comes to the daily order block I want to sell, you can see the market came inside the daily order block here and it gave a reaction. A day trader, your 1 to 3, 1 to 2, 1 to 5 can be found inside of that reaction, depending on what time frame you're trading on. Okay, if you're trading from the one minute time frame, you can definitely get a 1:5, 1:6, 1:10, just based off of this small reaction. All right, you can see how the market reacted from the daily time frame. Okay, so the 4-hour order block is aligned with the daily order block. So if we see the market reacting both from the daily order block and the 4-hour order block, then we have a reason to be selling from that area there. All right, so now that we have established this, I'm going to make this invisible once again on the daily time frame. Then I'm going to go on full screen here. All right, so you can see the market came into this area there, and then there was a reaction. Now again, just like we did here, because now we can see 2 levels of supply within the daily time frame. On the 4-hour time frame, I mean, now we can see 2 different levels of 4-hour supply levels that are inside that particular daily order block. All right, so we want to refine these levels individually again. And how do we do that? We just jump to a lower time frame. In this case, I'm going to go to the 1-hour time frame, where we're going to see even more structure, even more internal structure. So mind you, on the 4-hour time frame, this leg here is now going to be external structure. This leg here, there's a high here and there's a low here. Okay, now I'm going to highlight this leg, so when we go to the 1-hour time frame, we know exactly the leg we're looking at. So I'm going to highlight this leg. This is now external structure for the structure we are going to see on the 1-hour time frame. Okay, the structure within structure within structure, that's within structure. It depends on how deep you keep going into the market. Now looking at the 1-hour time frame here, let's remove this. Okay, I'm very certain you guys can see some type of structure in here from this being a high. You can see there's a low right there, there's a high here, there's a low here, there's a high here, there's a low here, a high here, there's this low, there was a change of character to the upside, this short uptrend. You can see what happened there. There's a trade in here for a day trader, you know, looking for a scalp trade. There's a trade in there, and a lot of people would have made money from this. Okay, but anyways, we are refining this. Okay, so in refining this around here, we now happen to identify this area here as the 1-hour breaker level. Okay, 1-hour breaker level. So in terms of templates here, I can say this is a lower time frame breaker because it's coming from essentially a lower time frame being the 1-hour time frame. So I'm going to remove this. That's the structure we got from the 1 hour. But basically what I'm saying here is this breaker level is also another level where we can look to sell the market from. Now during the news, okay, or before the news rather, the market reacted from the breaker level. Okay, the market reacted from the breaker level. All right, now mind you, refining this to the 1-hour time frame, I think where I marked out exactly was the engulfing candle. So I think I marked out this right here, this candle right here. I think this is exactly what I marked out right there. Okay, so I marked this out, and this will be an entry. All right, that will be an entry. So what basically happened here was the market, of course, clearly invalidated the breaker level and came to the order block during the news. Now the trade was caught on the 5 minutes time frame. Yeah, the trade was caught on the 5 minutes time frame. Now if you look at what happened here on the 5 minutes time frame, this is a simple reversal pattern. Now I know a very huge part of the smart money trading community caught this buy here. Okay, a very huge part of the smart money trading community caught this buy here. It's because different people have different perspectives when it comes to these markets. A lot of people can look at the market and see a sell, and they're going to catch the sell. A lot of people can look at the market and see a buy, and they're definitely going to catch that buy. Now, while this market was reversing here, the market was still trending to the upside. You can see how the market ended up invalidating the level I traded from. And then people that traded from this buy, of course, the massive take profit for them. All right, but my trade was based on a very simple concept, which I'm going to break down right now. So for this, let me first go to the weekly time frame. Let's go over to this way here, and I'll show you exactly what the trade was based on. Now, the trade is simple. If you have a supply level, right, and you're expecting market to get to that supply level, how would the market get to the supply level? The market needs to get to the supply level with some form of structure. All right, the market is not going to just, spike all the way up here. At least a lot of the times, the market is not spiking all the way up here. In fact, I'm going to show you two ways to even catch a sell, even with the market spiking all the way up here. All right. So the first one is the market can come to that level very, very slowly and very, very beautifully. Right. It reacts from the level, then it gives you a break of structure. Your trade is going to be upon the order block formed after that break of structure. All right. So that's going to be your trade idea. Right. Now, you're expecting the market to pull back into this area here so you can now sell. All right, let's change the color of this to red. This is what your expectation of this trade will be. This is what your trade idea will be. This red part here is your exact trade idea. All right, there's another way you can catch a sell, especially during news times when the market just spikes up to a supply level. How can you catch a sell? Let's say that's the supply level there, and the market is coming from all the way down here, and then it spikes all the way to the supply level here, then reacts from the supply level. Now, what will happen is, before you see a break of structure, unlike the first one here where you see after reaction break of structure, before you see a break of structure there, you're going to see a trend already forming. Now, I like to call this the order flow reversal, while I call this the normal reversal. And you can do me a favor by backtesting all of this as well. You're going to see what I'm saying comes in very, very handy. All right. So this is where you have your break of structure, but what you would observe is that there is a trend already forming before the break of structure. Now, what do I mean by trend? Clearly, you can see how the market is already breaking structure to the downside even before the last low that created the last high was broken. Okay? This is a trend before this was broken. All right? Whereas in this case, immediately after the reaction, you have a break of structure. So you're expecting the market to just go back to that order block and then sell. Whereas in this case, you're going to be trading based on trend now, with this area here being your first take profit target. So let's go back to the market on the 5-minute time frame. Let's see what happened there. So you can see after all the refinements from the daily to the 4-hour, now to the 1-hour time frame, on the 5 minutes is where we now got the entry. Okay, you can see massive uptrend coming into the zone. Okay, the zone or the order block in this case. Okay, now look at this once again. We have, let's start from here. We have a low all the way to a high, a low, a break of structure to the upside here, creating a high, a low, another break of structure to the upside here. I mean, to me, that's a very, very nice uptrend, if you ask me. I don't know about you, but what I'm seeing is a very, very nice uptrend. Now, mind you, we already have reacted from the order block here, but there was no confirmation to take a sell yet. Why? Because the market is still trending inside the order block. It's still going deeper into the order block. It's already inside the daily from here. It's already inside the 4-hour from here. Now it's within both the daily, the 4-hour, and the 1-hour as at this area right here. Okay, but it's still creating what? Higher highs. Then all of a sudden we have this boom to the downside. Now what you would notice here is the fact that it just did not even take out just one level of support or demand. Okay, one level, two, 3. Now, what is this telling you essentially? This is showing you intention. Okay. Now, a lot of people still would have been looking for a buy from here because all of that is now some form of trend line liquidity, as smart money traders will call it, and they are very, very correct. Okay. Again, perspectives matter. Okay. That's a very, very nice level of liquidity. The market swept all this liquidity right into your buy. Boom. You even had the confirmation entry. Boom. 2 entries. Only for it to fail. Now, why did it fail? Remember, the market is reacting from a daily level, not just a daily level, 4-hour level, and a 1-hour level, all at the same time. All right? All at the same time. Now, we had a break of structure from this high to this low. Now, on this time frame, this is the reason why internal and external market structure is very, very important. On this time frame here, this is going to be the external structure here. Now, if we zoom in a little bit right around here, what do we find? We find a level of internal structure. We have high, low. We have some type of high here. We have this as a low. This is a high. This is a low. You can see there's a small trend inside there. Okay, there's a small trend there. If you can't see it, I'm sorry, but the people that can see it can see it. All right, if you can't see it, just train your eyes to see it, because I can. I know a lot of people can. Some of you that couldn't see this the first time and you're seeing this for the first time, you might be confused. Maybe you need to watch previous videos of mine where I went over these concepts individually, the concept of structure. All right, I believe I should have a video in there where I talked about structure and I established all of these, okay, from scratch. All right, so if you can't see it, maybe check out the page. You can find resources that will be able to help you. All right, so this is an order block based on the internal structure of the market. All right, based on the internal structure of the market. And I believe, that was where my entry came from. For me, I always like to, adjust my entry, put it a little bit before the order block, just so I wouldn't be, not triggered into the trade by a small margin. All right, so yeah, that was the trade. That was the trade right there. Now, because of the effect of the news, I closed out very early on this trade, but that was a 1 to 7 trade. I believe I closed out at this low here, somewhere around here. Yeah, but that was the trade. So let's go back to this. Let's check my exact entry on the trade. Let's check the exact entry. 2680.74. 2680.74. So let's double click this. Go to input 2680.74. That was the exact entry. All right, so you can see, I believe it was because of spread, it was pushed all the way up, but I'm very sure I left my entry below the order block. All right, so that was the trade, guys. That was the trade. And of course, you can see how the market came into this level based on, again, a break of structure. I was just talking about trendline liquidity. You can see another level of trendline liquidity around here. So for the people who caught the buy, I want to strongly believe that this trendline liquidity was a good reason for them to have taken this as a buy. All right, so this, number one, trendline liquidity, and number two, external structure. External structure. All right, so external structure is one of the reasons why I believe a lot of people would have bought this market again from these lows here. All right, first, that's trend line liquidity. You can see 3 touches of the trend line. A lot of people will be expecting to buy from the 4th touch or something like that. All right, but yet again, if you look very closely right here, the market broke this high from this low. So all of this is the external structure. The blue line you can see, there's the external structure. Everything inside of it is the internal structure. Now, the external structure, it could have been gotten from the 1-hour time frame, I believe. Look at that. That is a 1-hour order block. Now, in this case, the 1-hour time frame is giving us the external structure, while the 5 minutes time frame is giving us the internal structure. Now, the 1-hour order block here is the external order block in this case. If we go to the 15 minutes time frame, we can now narrow down the 1-hour order block to a 15-minute order block now, where you have a better entry. And I believe a lot of my colleagues in the smart money community caught this trade based on this simple idea. You can see how this is a massive sniper entry. So it's kind of like, you know, you're running with the baton and then you're passing the baton to your colleagues. Like, bro, I just got the buy, or I just got the sell. You take the buy. Okay. It depends on what you personally are seeing in the market. Okay. It depends on what you personally are seeing in the market. Somebody can be seeing a whole buy while you're seeing a whole sell. Take your buy, the other person takes their sell, everybody eats. All right, you can see how this even came back to take the all the way up. That's a 1:10 risk to reward trade on a Friday. NFP trade. NFP trade. All right. So based on smart money concepts, right? Sellers made money and also buyers made money. It just depends on what side you were on at that particular time. Now, I said I'm going to give my projection yet again. So what we can see here is the fact that, let me just clear up some of all of this. What we can see here is the market has now invalidated the 4-hour level of supply and the 1-hour level of supply that was within it. All right. So this is where you want to adjust your markup. You can now remove this. Is now invalid. Okay. You can now remove this. It's also now invalid. All right. But mind you, the market is still within the daily order block. Okay. Let's remove some of these just to make the charts look a little bit clean. Now the market is still within the daily order block. Okay. Just for reference, yeah, I know you guys probably can see from here, but let's go back like this. Look at this. The market is still within the daily order block. So it's possible for us to still expect a sell. Now, where are we going to be selling from? Now, in terms of internal structure here, the market has invalidated on the 4-hour. The market has invalidated this level of internal structure. So the high is here. All right. The high here has been taken out. So you see, the market has invalidated that particular order block. So we are no longer looking at this level of internal structure, meaning that this level of internal order block here is invalid. We are looking at the one above. All right. Now the one above, the way I marked out this order block here, all right, is I took a leaf off the retail book and I marked out the, oh my God, how did I mark out this order block? I just marked out the first bullish candle here, I think. Yeah. This whole candle, because again, you can do multi-time frame analysis and go to the 8-hour time frame. I mean, there's no law that says you must get this from the 4-hour time frame. If the structure is not so clear on the 4-hour time frame, you can go to another time frame. Look at this on the 8-hour time frame. That is a whole order block there. So yeah, I marked this out from the 8-hour time frame. Now, in my opinion, okay, I'm now seeing this high here as a liquidity grab. Okay, so that's a liquidity grab right there. It's possible for the market to, develop further into this level and then sell off from there. It's possible. That's a definite possibility. Keeping in mind that even on this side, even on the 8-hour time frame, what we can see here is like a low, a high. We can see a low, a break of structure to the upside, pull back, break of structure to the upside, pull back. We can see the market as broken structure again. We necessarily have not had a pullback. So, of course, this can cause the market to react somehow in a way that this can give a reaction. Even if it's going to give us a pullback to this and a buy again, okay, day traders can find a very, very nice trade, especially if you're executing a lower time frame inside of that leg right there. All right. So, yeah, we obviously we don't know what to expect. We only can wait for the market to move, so we can now react to whatever the market does. But yeah, that's a definite possibility. So narrowing down this area here, from the 8-hour to the 4-hour, we can now see this order block here. Of course, this is daily, that's 4-hour. Let's take it down a notch to the 1-hour time frame. Now on the 1-hour time frame, looking at structure here, we have again another level of internal breaker. Now I really hope you guys are not confused, especially when you start to see this internal structure all the way here and there. But like, I want to believe that you understand the concept. Okay, I want to believe that you understand the concept of this. So on the internal structure, we have an internal breaker, simply a break and retest level. Okay, break and retest level. So on the internal here, we are seeing low, in high. Okay, now the market never really came back to this level here. The market never really came back to this level here before it dropped. Okay, that's why that level is still very important. So all I did here was put a line there. Now, if you don't know the level, I'm talking about the 2700.81 level. All right, so 2700.81 level. This order block marked out here is from internal structure on the 15 minutes time frame or 30 minutes time frame. All right, I don't want to overcomplicate this by going down to those time frames. I feel like this is already even too much for a lot of people to handle. Okay, especially people who don't really have that deep understanding about market structure. But anyways, yeah, we can expect price to react from this level, and we can expect a sell. We can expect a sell. Now, I'm not saying the market must sell. I'm saying it's possible for the market to sell. All right. Now, two ways you can enter this is risk entry and or confirmation entry. All right. So risk entry means you believe the market should react from this and sell. So you're going to place a limit right there. Something that looks like this. Now, if we are correct, maybe we can have a 1:3 risk to reward trade. Something that looks like this, or all the way down to the external low here. If that's going to be possible, that will be a 1:7. Or you can wait for confirmation again. Like I said, either you're doing the normal confirmation or the normal reversal or the order flow reversal. So from here, you can expect the market to maybe push back up to the upside and then now give you that break of structure confirmation. So you can now enter from somewhere such as this and then take this all the way down. All right. So yeah, hopefully, anybody who watches this video is going to gain a lot of value from this video, because again, this is like tons and tons and tons of gems right now. Okay, this is tons and tons and tons of gems right now. All right. Yeah, so that's going to be the trade breakdown. That's going to be the projection. And once again, if you like the video, if you learned anything from the video, you want to do me a favor to show that you support the channel by liking the video and subscribing to the channel. You may even want to share it with your friends. There's this cool guy on YouTube that drops a lot of gems based on smart money concepts. I really think you should check him out. All right, share the link with your friends. They can be part of the community as well. And of course, always leave a comment on the video. Let me know what you want to learn next time. Let me know topics that you feel like I should touch on, topics that you want me to explain deeper based on my understanding of the market. Okay, maybe you want to see my perspectives on things like Fibonacci, okay, on things like Bollinger Bands, things like RSI. All of these things work, even SMAs and EMAs, if you can blend them very well with market structure. All right, so that's going to be the video for today. And once again, man, it's Profit Gang, man. You all know what it is. And if you don't, it's from the streets to Wall Street, man. Gang, let's get it.